Welcome, Insignio family. We have a very special guest today with us. My name is Alejandro Guardiola. I'm on the investment solutions team. With us, we've got Matt Hougan, the CIO of Bitwise Asset Management. Matt, welcome to the show.
Alejandro, thank you for having me. I'm so excited to be here.
Amazing. So great to have you here. Ladies and gentlemen, for those of you that do not know Matt, couple little key introduction pieces. He's a world leading expert on crypto and ETFs. He's the CIO of Bitwise Asset Management, which is the world's largest provider of cryptocurrency index funds. Previously, he was CEO of ETF.com and of Inside ETFs. Uh, he has, for the CFA curriculum, which I went through many moons ago. Crypto was not around at that time, wish it was, but he has created two publications. Number one is a comprehensive guide to exchange traded funds, as well as the crypto assets guide to Bitcoin, blockchain, and cryptocurrencies for professional investors. It's huge, and there's some young kids here going through the CFA curriculum now, so it's being ingrained like at the start.
I love it. I love it.
So Matt, let's get right into this. We've got a short amount of time to cover a broad range of topics. What is Bitwise, and how did you guys become such a pioneer in the space?
Yeah, absolutely. First, a shout out to those people going through the CFA. That is not easy. So you have your work cut out, but it's worth it in the end. Um, yeah, Bitwise is a specialist crypto asset manager. We were founded in 2017 and have been managing crypto assets on behalf of professional investors for more than 7 years. Today, we manage north of $10 billion of assets across ETFs, SMAs, private funds, and hedge fund strategies. I think sort of what makes us unique are two things. Maybe three things. One, we're 100% focused on crypto. This is all that we do. We have a team of 100 plus people who wake up every day, 24/7, 365, thinking about crypto, analyzing the market, monitoring news, and ensuring that our products do the best job to capture this space in a safe, secure, and low cost fashion. I think the other thing that really differentiates us is we're built to serve financial advisors. From the very start, we architected our business to serve the people that serve the wealth of the world because we think they play an incredibly important role. And so that means we build products that fit into how financial advisors work, right? Our first fund was the first crypto index fund. We've been a leader in crypto ETFs because those fit into advisor workflows. And then equally important, we build our research and distribution team to serve you. We know that when you buy particularly a volatile investment like crypto, you're going to have questions a month, 2 months, 3 months down the line. And so we have the only nationwide distribution team in crypto. We have a 7-person research team that prepares answers to questions, and we're really architected to serve advisors. I'd say the last thing is this is pretty unique in crypto. We've been around for a while, right? 7 years is a long time in crypto. So we've seen bull markets and bear markets. We've seen custody evolve, trading evolve. And that matters because when we design products and manage products, we're pulling on 7+ years of direct history, managing hundreds of millions and $1 billion of assets. So, we've been around for a while, we're crypto focused, and we're built exclusively to serve you. That's how I think of Bitwise in a nutshell.
Amazing. And to add on to that fact, we have recently, as a firm at Insignia, we've recently kind of garnered our way to look at it, way to approve it, both on the brokerage and advisory side. Your sales team has been an integral part of helping us get educated as a firm. So maybe make that a fourth point of what Bitwise has done.
100%.
So when investors think about Bitwise, you guys are strictly crypto asset manager.
That's
What
right.
what else should an investor think about when they think about Bitwise?
Yeah, well, I think you should think first and foremost about the products we provide, right? Whether they are low cost ETFs or more sophisticated products, including index based products. when you're allocating to the crypto market, you want to make sure the products are best in class. This is not a market where you want the cheapest heart surgeon. It's a market where custody matters and how you trade matters. And so we build that in all of our products. And the second one is that we're responsive. We live to answer your questions. I do think sometimes advisors are worried about asking questions. They're worried that maybe they don't know that much about crypto and their question is too simple, or maybe they know a lot and they think their question is esoteric. But that's what we've been built to do. We take 15,000 meetings with financial advisors a year. We love those meetings. It's how we learn, and we build all the research and reports that you need to answer those questions. So, yeah, think of us as a resource. You could think of us as a product manager. Of course, we have products, but everyone has products. Think of us as a resource that you can tap into. Someone who's studying crypto 24/7, 365, and has been in it for 7 years and is at your service. That's how we like to think of the company.
Amazing. Could vouch for that. Your guys' presentations, charts, analysis is second to none. You mentioned custody matters. Okay, so if we rewind the clock, 2011, Coinbase eliminates trading risk behind Bitcoin. We've seen some major evolution to that. If we look at the competitive landscape, there's other asset managers that have launched the Bitcoin ETFs, but you guys stand apart, partly because of the custody.
That's right, exactly. You know, the first thing you have to do is make sure you're acting in a safe, secure manner. And because we've been trading in this market and custodying crypto assets for 7 years, we've done unique due diligence to select the best custodians in the market. And we've set up a way to, for instance, trade with our Bitcoin ETF, where the assets are always in 100% cold storage, which is the most secure way to hold a crypto asset. Some of the other providers move their crypto into hot wallets that are connected to exchanges to trade, or maybe they create credit agreements with exchanges to trade. Those are risks you don't have to take if you're an expert in this space. And so we've designed our trading and custody ecosystem to do that. It's just one small example of how sort of that 7 year track record of excellence works its way into product design, but it's all designed to make our products the most secure they can be. It is true. There are lots of ETFs out there. There are ETFs from large providers. Our ETFs are amongst the lowest cost and the most secure in the business, and we're really proud about that.
Incredible. On an almost weekly basis, you guys come out with a CIO memo. We're on issue number 92. For those of us have been reading it for some time, you have made some very bold predictions from the start. And now looking back at some of those very bold predictions, I mean, this is market consensus now. Easy, right? Easy game. What other really bold predictions does Matt Hougan have today looking forward?
Well, I'll tell you, it's funny that you mentioned it because literally just before we were doing this interview, a news story that came out that validated one of our predictions, which is we predicted this year that the government would relax rules around 401ks to let 401k investors access crypto. And sure enough, 15 minutes ago, that happened. So fun to bring that up because that just happened. But in terms of forward looking, look, we're on the record saying we think Bitcoin, which is trading, just north of $100,000, will end the year at $200,000 or above. And we think it could even get to $1 million by 2029. Now, why do we think that? The reason is really simple, Alejandro. We look at supply and demand. And if you've been reading that CIO memo, you know that I harp on this continuously. Bitcoin's price is set by supply and demand. And there's only a little bit of supply coming to market every year. The Bitcoin network only produces about 165,000 Bitcoin a year. And ETFs are gobbling up about 500,000 Bitcoin per year. And companies are gobbling up another 300,000 Bitcoin. You don't have to be a CFA to know that 800,000 is more than 165,000. And we think as those numbers collide, the price is going to go up. So among our predictions this year is Bitcoin 200,000 on its way to substantially higher numbers by the end of the decade. And we feel very confident that we're trending in that direction.
And when you look at the landscape right now, there's so much going on to support that thesis, right? You've got companies that are now holding Bitcoin on the balance sheet. What does that number of S&P companies look like today?
Yeah, they're getting to be close to 100 publicly traded companies worldwide that hold Bitcoin on their balance sheet. And that trend is growing. We think, that was 70 if we did this call a month ago. So it's
Right.
really expanded. And I think it could be 200 plus by the end of the year. So that's another major catalyst coming into this market. And those are companies that buy Bitcoin, put it on their balance sheet, and have no intention to sell it in the future. So they're just hoovering it up and further reducing supply.
And so that theme also kind of dovetails to a world where the US dollar maybe is not the only reserve currency, right? Who would have thought? But okay, yep, here we are. We need another currency besides the US dollar. It could be gold. It could be, well, there's not a lot of choices out there. And then you've got a perfect technology with limited supply. And then Bitcoin kind of makes its way into the conversation. Is that a way forward for folks and for companies?
I think absolutely. I mean, the thing about the dollar is an incredible currency. It's one of the best fiat currencies out there, but it faces huge challenges. We have $37 trillion in debt. We're adding $2.5 trillion in debt every year. We just saw the House pass its new budget bill, which increases the deficit over time. So that's going in one direction. Eventually, that creates risk to the dollar. And so you're seeing countries around the world looking for alternatives. I think Bitcoin is actually a better solution than gold. Look, gold is fantastic. I'm a big fan of gold, but Bitcoin is like gold that you can store infinitely at low cost and move around the world instantaneously. Gold is big and physical and heavy. And if you have to move it from one location to the other to pay for something, it's a mess, right? How do you do it? You have to fly it on airplanes with armed guards. It's very difficult. So I think Bitcoin is the new version of gold. That's why we have already more than 10 countries that own Bitcoin as a reserve asset. I think that number will double as well. So we have companies, I think that number will double. Governments, I think that number will double. And of course, institutional investors who are gathering up Bitcoin at a rapid rate. It's a remarkable series of demand drivers.
It truly is. So there's an existential threat right now. U.S. Treasury market, who's going to be that next marginal buyer? And then we introduce a concept of stable coins. Okay, and we've recently seen a bill come out to support, some of the future for stable coins. Matt, tell the audience what stable coins are, what they're not, and could stable coins be a natural, support for treasury market?
Yeah, I think they could. Stablecoins are the other killer app in crypto. So Bitcoin is a killer app, which you can think of as digital gold, a great way to store wealth. Stablecoins are digital dollars printed on a blockchain that can move at the speed of blockchains. And they're doing exceptionally well. They, basically started in 2020. Today we have $250 billion in stablecoins. The US Treasury thinks that could be north of $2 trillion in a couple of years. Let's talk about why stablecoins are so valuable. Well, here domestically in the US, when we go and we buy something at a store, we pay a 2% fee to Visa. Why does that make sense? It doesn't make sense. Imagine if you had to pay a 2% fee or $2 fee every time you sent a text. It's a ridiculous thing. Stablecoins could allow you to process those transactions in a second, have them settled with finality, and the fee should be less than a penny. That's a revolution. But actually, even bigger implications abroad. As challenging as that is for us in the US, 2% to move money abroad is extraordinarily cheap. If you go to many emerging market countries and try particularly to do cross-border payments, you can be talking about settlement that stretches multiple days. You can be talking about fees that are 5 or 10% or more. In some parts of the world, there's rampant corruption. If you have stable coins, you can have US quality financial rails in every market in the world. And that ties back to what you mentioned, which is this is the next source of demand for treasuries. As you said, governments around the world are dialing back on their purchases of US treasuries. So who's going to buy them? Well, the answer is if people around the world can access dollars on their cell phone and can do payments with second finality via stablecoins, they're going to do that. And how do they do that? Well, they send money into stablecoin issuers, and the stablecoin issuers take that money and buy treasuries to back those stable coins one for one. So every time there's a new stable coin created, there's a dollar more of treasury demand. And we think this is going to be one of the biggest sources of demand for stable coins. It's one of the few things Washington can agree on.
Mhm.
Democrats and Republicans both support this because they know we need more people to buy treasuries, and stable coins are going to be the best way. So a few years from now, maybe even next year, we're going to have these two real world killer apps in crypto. Bitcoin as a savings technology, stablecoins as a payment technology. And I think finance will start to look very different both here in the US and abroad.
Indeed. I mean, necessity is the mother of all invention.
That's right.
So stable coins right now, $200 billion market, even though there are folks like myself who have gotten burned by stable coins. If we look back at all the pitfalls and
Yeah.
ways that folks have gotten in trouble, um, false starts, head fakes, scams, etc. Given all of the noise that has happened, um, if we had seen a straight line, maybe Bitcoin would be at 500 if there hasn't been anybody getting burnt at all away.
I think that's right. And it speaks to something really important. The reason people got burnt is there wasn't clear regulation. Like regulators refused to regulate this space. So you had stable coins that said they were worth a dollar, but weren't backed by assets, right? They were backed by faulty math and they eventually went to zero. Luna was a good example of that. Uh, the new stablecoin bill going through Congress would require stablecoins to be backed one for one. And so there would always be a dollar of treasuries for every stablecoin that existed. That means there would be less risk in the future. And you raise a really good point about whether Bitcoin would be at $500,000 or more, which is all of those blowups, whether it was Luna or FTX or all these other issues, really slowed down crypto's progress. But we're getting to the point where crypto is better regulated, where those blowup risks are dramatically reduced. And that should make the asset less volatile in the future, and I think should make it more valuable in the future as well. So there is a sort of pro-cyclical positive loop that's starting to build in crypto where it gets safer and more secure and therefore more useful and therefore more valuable. And I think that's the part of the cycle that we're in right now.
Okay, so take the other side of the trade here, and
Mhm.
like a Bitcoin maximalist would say that we want no banking intervention, we want no oversight, we want it to just be a free kind of economy, let it regulate itself. Kind of walk us through those thoughts, and do you fear that overregulation might take away the promise of Bitcoin in any way?
Yeah, it's a reasonable question. The way I think of it is there's sort of a real world and a theoretical world. So in a theoretical world, I understand the libertarian argument for that. It definitely resonates with me philosophically. But in the real world, if we can have somewhat reduced risk while still retaining the key properties of something like Bitcoin, and that's the key, then I think we're in a better place. So what are those key properties? One is it's decentralized. Like it wouldn't work if the government controlled Bitcoin, right? Then we couldn't trust it to be what it is. It wouldn't work if the government made it illegal to hold Bitcoin on your own hardware wallet, right? Without relying on an institution. Now, I know there are companies like Bitwise that are intermediaries that hold Bitcoin on people's behalf because that's convenient and it fits into their workflow. But it's critically important that we all have the right and the ability to hold it ourselves without relying on Bitwise or Goldman Sachs or BlackRock. As long as we have those two foundational principles, a decentralized store of value that government can't muck with, and the right to self-sovereignly hold it without relying on anyone else, that's a much better world than we were in before Bitcoin. And when I look at the network right now, those things are still as true as they've ever been. In fact, they're easier and more
Sure.
true today than they were in the past. So I'm positive, but it's something to keep our eye on.
Matt, what was your first experience with crypto or with Bitcoin?
Oh man, this is an embarrassing one. You're killing me.
Those are the best.
Ah, So I was running ETF.com and we had 8 young analysts that we were putting through the CFA Institute. And every week they would lead a meeting talking about something in the market. It could be international activity, it could be REITs, it could be sector investing, momentum investing. And in February of 2021, Bitcoin crossed a dollar. It was called Dollar Parity Day. And one of our analysts led an hour-long conversation about what Bitcoin was.
2011?
What's that?
2011.
2011. Yep.
2011.
$1. He went on to become the first Wall Street analyst covering Bitcoin and now lives in a very nice house in Santa Barbara. And I kept grinding in a career for 14 years because after that meeting, Alejandro, I left and went and bought a cup of coffee. If I had instead thrown $100 into Bitcoin, we'd be talking about, 10, $100 million today. So that's my painful first story, but it put me on this path a little bit, and I'm grateful for that event.
Incredible. If you could tell future crypto investors who have not gotten off of zero yet, what words of wisdom or advice would you impart on them?
Yeah, I would say look at Bitcoin with fresh eyes. I think one of the most challenging things about Bitcoin is we all come with anchoring bias. So I just shared some of mine. I missed it. And it's hard when you missed it to come back and say, well, I should buy it now. It's at $1,000, right? I missed it. I could have bought it at a dollar.
Yeah.
But you have to look at it fresh eyes and say, is there a huge opportunity left? On Bitcoin's case, I think there is. As mentioned, I think it could 10x in the next 5 years. But it's more than that. If you're worried about custody risk or trading risk, or maybe you've heard about criminal activity on Bitcoin, or you're worried about environmental risk, the Bitcoin of today is very different from the Bitcoin of 5 or 10 years ago. There's AML KYC at crypto exchanges, which have dropped illicit use to vanishing levels far below cash. Bitcoin is now considered, even by the World Bank, to be positive in terms of its environmental impact by incentivizing renewable energy. It's now held by the largest institutions in the world. It's custodied by S&P 500 member firms, right? This is not your grandfather's Bitcoin. So my advice, if you're still at zero, is to forget what you think you know about Bitcoin and look at it today at the asset that's being held by Harvard's endowment, by MIT, by Stan Druckenmiller, by Ray Dalio, by BlackRock. It's a different, more institutional asset, and I think that's a useful reset that people can go through.
Certainly is. Recently, we've seen Coinbase get added to the S&P 500. MicroStrategy is part of NASDAQ. What other key news flows over the last few months should folks kind of be aware of?
Yeah, well, I'm glad you brought up two equities because I think there is some really interesting things happening, beyond crypto assets on the equity side. We're about to see the IPO of the largest stablecoin issuer, Circle. I think there's going to be huge demand for that. I think we'll see a handful of crypto IPOs come in the next year. That market is really unlocking, and that's very exciting. And then the other big headlines over the last 6 months are just a sea change in regulation from sort of avoiding regulating it and just launching lawsuits that ultimately failed against the industry, which is largely what the SEC did, to real deep engagement. We've seen enormous progress from the SEC in making crypto a true institutional asset, in normalizing its treatment. Now we're seeing Congress pass pro crypto legislation. Yeah, it's really been a sea change from a regulatory risk perspective in a very positive direction.
You've made predictions that $100 trillion of financial assets will eventually move over blockchain. So we are truly still in the first inning if we look at the kind of the totality of where this is headed, right?
100%. Everything's going to move over blockchains. That money. I mean, we don't talk about it enough, but our existing financial system is just absurdly slow, right? If you want to wire money to London, it takes 2 business days. What world are we living in, right? Like you can get an elephant delivered from Amazon in an hour, and it takes a day for stocks to settle. It's absurd. So yeah, everything is going to move over these networks. Bitcoin can move money faster than JP Morgan or Goldman Sachs. There are no employees at Bitcoin. There are no CEOs. There are no offices. Um, all assets are going to move. We're very much still in the first inning. This is the internet disrupting finance, the way the way it disrupted video, the way it disrupted news. It's happening again just for the first time in finance via blockchain. And we're in like 1996 internet era. The best days are ahead of us.
I mean, the future is here. We're
That's
just
right.
step into the future.
That's right.
As,
Exactly.
as far as Bitwise solutions, okay, you guys have the first crypto index, which is a basket of 10 other cryptocurrencies. So in many ways, rising tide lifts all boats.
That's right.
Let's not forget about Ethereum, right? Is that a favor? You know, and as it goes, right? Sometimes things get out of favor and it doesn't matter till it matters. Any words on Ethereum?
Yeah, I think Ethereum is a very rare thing in crypto, which is it's a value play. As you mentioned, it's become out of favor. But if you look at the underlying fundamentals, what are the things we're excited about in crypto outside of Bitcoin as digital gold? We're excited about stable coins, and guess what? 56% of them move over the Ethereum network. We're excited about tokenizing real world assets. Guess what? Some vast majority of that moves over Ethereum. We're excited about agentic AI and AI integrating with blockchains. That's all happening on Ethereum. So the fundamentals of Ethereum are doing great, and the token price is just sort of now waking up to that reality. I haven't seen many value plays in crypto in my years because it's got so much attention focused on it. But I think Ethereum fits that bill. I'm very excited about it, to be honest.
Okay, so I mean, we can make a case as far as value goes because growth, as far as stocks, it's been growth, 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 and if things are gonna kind of, the
Yep.
pendulum's gonna swing. Okay, so investors don't discount Ethereum just yet. Bitwise, you also have a basket of corporations that are holding at least 1,000 Bitcoin on their treasury. That's OWNB.
That's right.
Okay, as well as a basket of 30 crypto innovators, which is the BITQ, uh,
Yep.
which holds companies like MicroStrategy and Riot, etc. Are there any names in that bunch that you are more partial towards?
I really like that. I think if you're building a rounded crypto portfolio, you want exposure to the assets, either through our index product, BITW, or our Bitcoin and Ethereum ETFs, BITB and ETHW. But you also want exposure to these companies, right? Things like stablecoins, right? The largest stablecoin issuer is IPOing very shortly. It'll be added to that index and you'll have exposure to that. So I would pair those two. Within that product, I mean, I really think Coinbase is a special company. Yeah, I know it's already been added to the S&P 500, but it's been executing exceptionally well for multiple years. And I think it's going to be one of the largest financial companies in the world. So I'm very excited about that. And I'm very excited about these new stablecoin pure plays that are going to be entering the index later this year.
Where do you see Bitwise and where do you see Matt Hougan in 5 years?
Matt Hogan's still going to be doing this, CIO here at Bitwise. Look, I think this is a once in a generation trend. It's very rare to see new asset classes emerge or new markets that could scale to 10, 20, 30 trillion dollars in assets. I saw it happen once with ETFs. When I started at ETF.com, ETFs were about 400 billion in assets. Today they're 15 trillion. So I've seen this story before. Crypto, when I started at Bitwise was about 400 billion in asset in value. Today it's 3+ trillion. I think it's on its way to 30. So I will still be doing this. I think we'll never have this scale of investment opportunity in my lifetime again. Bitwise aims to be the leading crypto asset specialist asset manager in the world. That's our goal. So we're going to be providing products across beta, alpha, and strategic exposures. And we're going to be helping investors like you gain exposure to this explosive growth in safe and secure ways. So, more of the same, my friend.
Incredible. Well, ladies and gentlemen, thank you for joining us today. What a treat to have Matt Hougan, CIO from Bitwise Asset Management, with us. Matt, you're always welcome here, and thank you again. Thank your team for all that you've done for us.
Thank you for having me. And anything we can do to support, just let us know.
Certainly. Thank you so much.
Insignia Financial Group, LLC comprises a number of operating businesses engaged in the offering of brokerage and advisory products and services in various jurisdictions, principally in Latin America. Brokerage products and services are offered through Insignia International Financial Services, LLC, headquartered in Puerto Rico, and through Insignia Securities, LLC, headquartered in Miami. Both are members of the Financial Industry Regulatory Authority, FINRA, and Securities Investors Protection Corporation, SIPC. Investment advisory products and services are offered through Insignia Advisory Services, LLC, an investment advisor registered with the Securities and Exchange Commission. In Uruguay, advisory services are offered through Insignia International Asesores de Inversión Uruguay, SA, Insignia Asesores de Inversión Latam, SRL, and Insignia Asesores de Inversión de Uruguay, SRL, in Argentina, and through Insignia Argentina, SAU, and in Chile through Insignia Asesorías Financieras, SPA. Collectively, these 8 operating businesses make up the Insignia Financial Group. To learn more about the broker-dealers, including their conflicts of interest and compensation practices, please go to https://insignia.com/disclosures/ or via www.finra.org. To learn about Insignia Advisory Services and any conflicts related to its advisory services, please see its Form ADV and brochure, which can be found at Investment Public Advisor Public Disclosures website, https://advisorinfo.sec.gov/.